Good morning, everybody. Kirk Spano here. It is November 14th. I did go to Chicago this weekend and played at the Grand Victoria Riverboat in Elgin, Illinois. Wonderful place. If you ever get to Elgin or the western suburbs of Chicago, go to a place called Al's Cafe and Creamery. What they're really known for is their ice cream sundaes and their shakes and malts. So if you had a kid with you, it'll fit the bill. So I do recommend Al's Cafe, Creamery, and Steakhouse. I think that's all the names that he put on it. In any case, played poker, 2 events over the weekend. First event started Saturday afternoon, $400 buy-in, and I took 29th out of 441 people, and that was just enough money to pay for my entries and my craps game that I would lose at the next day. So nothing too exciting, but 29th out of 441 doesn't really win you that much money, just several $100s. Went and played in the senior event on Sunday on about 4 or 5 hours of sleep because I was drinking Diet Coke the night before to stay awake for that tournament. And didn't sleep very well. So I played in the senior event, got a pretty big chip stack about halfway through. And that's the point where the rebuys end. So with about an hour left of rebuys, maybe a little bit less, 3 different people with short stacks got into hands with me, and I was in the lead all 3 times, and all 3 times I lost. That is the nature of gambling. So sometimes you can get in with all the right things going for you, and you still lose. That happens in investing too. So I did not cash the second event because I decided, well, I don't have many chips going into the second half of the tournament, going to be pretty desperate, have to get lucky. So I decided to try to get lucky earlier than later, which is the opposite of what I try to do if I have chips. But when you don't have chips, you roll the dice a little bit. And I know that people do that with their investing too, is when they start out, they gamble. Somebody last week asked me if they should be buying stocks with like a $6,000 account. And I said, no. You're still saving. So if you're a small account, and I know there's some of you out there, a few of you have talked to me with, $5, $10, $20, $30,000 accounts, you really ought to just be pounding your money into our Global Trends ETF portfolio. That is where you can accumulate money. You're not taking a lot of risk based on single stocks. You're investing in the better industries, the better sectors, the better parts of the world. And even that'll beat the S&P 500 for you. So while you're accumulating your first, I'd say 100 grand, you should be almost exclusively ETFs and the funds in your 401k. And when you get to around $100,000, by that point, you should have been paying attention to the stock market for a number of years, hopefully been through a cycle or two, understand that things go up and down, that companies with great ideas sometimes don't execute, and sometimes companies with questionable ideas blow up, like FTX did last week. And that can sometimes leave a residual impact on the market where you can find an opportunity. So we'll talk about that in a minute. In any case, it was a nice trip to Chicago. Not much traveling planned here over the next 4 or 5 months. I have 5 days in New Orleans coming up and maybe 10 days in Florida over the winter. But other than that, pretty much Milwaukee bound, hanging out with the grandkids, doing a lot more research, and trying to figure out where to put the last hunk of cash as this market decides whether it's ready for a new bull market or if it has 1 or 2 or 3 more legs down. Now, as we've talked about, China is a linchpin to almost everything. And I told you 3 months ago or 4 months ago that President Biden would at some point reach out to President Xi in China and see what they could work out. Well, that meeting happened yesterday, and today you get an announcement from President Biden that, hey, I don't think that China's on the verge of invading Taiwan anytime soon. So they tried to make nice. I think that goes towards my recommendation over the last few months that you be accumulating some commie stocks. I'm buying EMQQ because that is in the best sector, the internet and technology, IoT, all the things that are very consumer driven. And while I was telling you sell your commie stocks 2 and 3 years ago on the peak, now I'm telling you buy commie stocks on the trough. So I think that owning EMQQ is a pretty good way to go. You could segregate out your investment and buy KWEB and keep that separate from your other emerging markets investments. I don't think that that's a bad idea. We talked about that in the Global Trends ETF report last month. And I want you to really understand that most growth in the world is going to come through the emerging markets. And even in the growth in the developed world, you're going to see connections to the emerging markets to drive their growth. Technology is an overriding theme, the fourth industrial revolution. So is clean energy. We're seeing reports right now that they're trying to figure out how to help the emerging markets skip the fossil fuel age. Well, seeing as they skip the shopping mall age, I think we can probably figure out a way to get them to skip the fossil fuel age too. So expect a lot of negotiations over the next year or two, but ultimately you're going to see half of the world that still needs a lot of electricity and energy go almost straight to renewables. Think about how big the energy market is now. If it doubles in size and virtually all of the new energy is renewables, that's an awful lot of money being made from very small numbers. Now, when I say almost all of the energy is going to be renewable, that's already actually happening. Virtually all new energy, ex the recent crisis, over the last 7 or 8 years, has been on net renewables, especially in the Western world. So while China and India are still using coal, even their new additions tend to be more renewable than that. When they get to the point that they're all renewable additions, which is 2 to 4 years from now, maybe, it's not that far away. It's not 10 or 20 years. It's this decade. The money is there. The plans are there. They're already working on it. It's just a matter of when does the fossil fuel usage turn over? And I keep pointing to 2026 and 2027. So when you watch these videos, future listeners, and remember, this is 2022, I'm saying this. I've been saying it since 2020. That 2026 and 2027 are the ramp years, not only on clean energy and everything connected to clean energy and the technology that drives it, but those are also the years where fossil fuel use is basically peaked and starts to turn over. And that turning over will take time, right? Transportation fleets age and then get put on the rust heap. They don't get thrown out brand new. So you'll see kind of a glide path to the cliff that lasts a number of years, and then it finally falls off a cliff. Probably late 2030s is what the projections look like. That's what BP seems to think. Several others in the major oil space seem to think that too. Engine Company One, which rescued Exxon, seems to think that. So if the fossil fuel players are saying that, and they're not investing money in development to go much past 2040, gotta think we're going to be pretty on our way to being very heavily renewable sometime in the 2030s. All right, so let's take a look at one of our companies. AST Space Mobile, I just played the video for you. Well, not him, not Santa. Just played the video regarding their unfurling of their antenna out in space. Now, what we know is that there's going to be hiccups with that, and that stock is heavily shorted. Those spikes down, right? Those troughs that traders are going to probably make happen, you need to be buying. Here's why. The technology that's in space right now is going to work, and the next set of satellites will be better. How can I be so sure that it's going to work? It's because of the people involved. Take a look at who is on this project. It's American Tower, it's Nokia, it's Rakuten, it's AT&T, T-Mobile. 5G from space is going to be a reality, and AST Space Mobile, with their 2,400 patents and patent pendings, is in the lead by 3 to 5 years over everybody else. AT&T just came out and said that. Now, you can also consider that you have competitors lining up because they know that it can be done. They don't know exactly how, and they're watching AST Space Mobile to see what they can steal from them and get away with it, and then they'll pile in. But by then, AST Space Mobile might just be part of American Tower. American Tower CEO is just talking about the partnership with AST Space Mobile and said, look, we're the biggest antenna company in the world for 5G, and we're trying to build out, but oftentimes it's challenging based on populations and expenses, and then the geography itself. If we compare the towers with a space-based solution to fill in the spaces and provide contiguous coverage for your 5G, this is a great idea for us. Now, American Tower covers, I believe, about 1.6 or 1.8 billion people on the planet. So about a quarter of the population that is going to have cell phones in the next couple of years. American Tower is worth $100 billion. AST Space Mobile is worth under $2 billion. Do you see a disconnect? If American Tower is worth $100 billion and they can absorb AST Space Mobile, what is AST Space Mobile basically worth if they can provide 5G to more people? So let's take this kind of into the thought exercise realm. Let's suppose that American Tower, at great expense to building towers, could cover half the planet. But because of the CapEx, other challenges, let's say they're still only worth $100 billion. What does AST Space Mobile, whose solutions will be cheaper for covering half the planet, be? So when I have told you that I think AST Space Mobile could be a stock that goes up 20, 30, 40 times, I'm not kidding. The buyout price for AST Space Mobile for sure could be between $30 and $50 billion at some point. May not get all the way there. There might be a cash out moment at 10 or 20 billion for the CEO who owns most of the company. You know, hard to say no to becoming made into a billionaire overnight, right? Even if overnight was 20 years of work. There's going to be scary moments with this because you're going to get short attacks and fake reports that say that the technology doesn't work. It's all going to be lies. The technology will work. It'll probably need tweaking and upgrading, but it's going to work. You wouldn't see SpaceX and everybody else trying to jump in on this if it couldn't work. And these guys have a head start in years. So if you haven't bought any AST Space Mobile yet, let's take a look at the chart. This is what it did overnight, over the weekend, overnight? Yeah, overnight, just on the unfurling of the antenna. Then it came back down to right where it was. But this was the run up. I want to show the last 3 months. This is the run up off of the trough, just in the last few weeks, actually. Take a look at this. Go back to the dinosaur age. There's my little dinosaur. The little dinosaur represents brand new, right? The start of the chart. So you had hopium up to about 20 something, but investors are impatient because, why wouldn't you invest for 20 minutes instead of 20 years? And I don't even know that we need this anymore. We don't really need that anymore. You just take a look at this buy zone, which has been pretty consistently right. And now it's coming off of a trough. Could it come back down to here? Absolutely. Could get down to $5, $6, $7 again. No sweat, right? Somebody just has to publish something scary. And I guarantee you that some piece of shit trader doesn't care how he makes his money, probably lives in a jurisdiction where he's not going to get prosecuted, is going to have something published that says doesn't work. Stock will drop, shorts will start to cover, retail will sell because they're scared and they're stupid, and there you go. That'll be the moment where you get your last chance to buy this super cheap. What happens if these guys beat them to the punch? What if they demonstrate a call and put it on YouTube and they make the phone ring? Then the shorts have a real big problem. This stock is 30% shorted. If they don't cover because they can manipulate this down, or they can say it's not going to work because the phone doesn't ring the first time, Watson, then it's just going to skyrocket. We go all the way back to 20 pretty quick. So you can't wait for that potential downdraft. You have to cover your bet both ways. Selling the cash secured puts and having a starter position at least is the way to go. I have puts sold. I also have a 2%, 2.5% position, almost 3 probably, because I have become very comfortable with the idea that not only is this going to work, that once it does work, it's a buyout target at least at 10 billion, probably at 20 to 30 billion, and quite possibly at 30 to 50 billion. That's how big of a deal this is. 5 billion people have a smartphone right now. That's going to 7 or 8 billion over time. And right now, most of the world is still on 3G and 4G. Imagine if these satellites can do 5G, and imagine if a generation of satellites 2 or 3 or 4 or 5 years out can do 6G because they get a jump on that technology. This is a big deal. Let's move on to another company on our list. Let's take a look at Palantir. Somebody actually put this in the chat room, so I thought we'd use their article. I was going to use something else, but hey, let's use this one. So we've talked about medical records, and actually the guy sitting on my right in the senior event was kind of a big shot in healthcare in the Chicago area. What company can I tell you he worked for without telling you that's who he worked for? Think of an old time comedy team, but not Costello. In any case, in England, they want to start hooking up all the medical records to a data sharing system, essentially, so that no matter where you are, your health records follow you, your treatments and everything. And right now, if you're in a particular healthcare network, that already happens. But it's when you have to go to another healthcare network, or when the government wants to try to monitor healthcare in a country because of pandemics or cancer clusters or whatever, it's difficult to get the data. So they're going to start connecting the network. Now, there's a couple of different ways to do it. You can do it through existing technology. You can also do it through blockchain. And it's already happening through blockchain so that everybody would have their own unique data set. And that anything public or able to be shared more directly network to network would have a different protocol that made it hard to identify you individually unless you were giving that permission. So you may have a blockchain type of key in a card or held in your cell phone that allows a medical provider to unlock your data. I'll tell you, if you're in an emergency, you really want this data to be pretty easy to get by the medical people, don't you? What you want protection from is from companies that would market to you or some other way use your information in a way that doesn't benefit you directly. Between the AI, the network connections, and blockchain at some level, we'll solve all these problems. These are things that we talked about 10 and 20 years ago, is how do we share information doctor to doctor, network to network, pharmacy to doctor, doctor to pharmacy, so they don't accidentally kill you with giving you drugs that don't interact well, and that they can put all the information on you together so that AI can make sure you're getting the right treatment, which is what's coming. We already know that Watson with IBM is something like 80% or 90%, is some big percentage, more likely to give you the proper treatment than a team of doctors. What do you know when a team of doctors tries to fix something for you? They start with the least intrusive thing they can that might work, and then they work their way up. The AI can take all the data and process it better, and they've already proven that the AIs are better at picking a treatment for you. Now, the doctors are needed to administer it and monitor it, but AI is going to play a very integral role in your diagnosis and treatment in the future. And it's already starting to happen. The company that might get the contract over here in England is Palantir, because they're uniquely set up to be able to do this. And I say uniquely, they're in a group, right? It seems like they're trying to steamroll the contract through because of the people who are involved. It needs to go through the same bidding and vetting process as any other government contract, but Palantir is in the hunt. Right now, they're the favorite because of insider play, probably. But the Guardian usually points out pretty interesting stuff, and when they do, it gets paid attention to. So Palantir may or may not get this contract, but they're in the hunt for these types of contracts all over the world. Palantir isn't just a defense and intelligence company. They're an AI application company with multiple platforms for different sorts of solutions. And one of the solutions here is they're going to have to make sure that information doesn't get shared inappropriately, or that you're not identified when you're not supposed to be identified, right? No Facebooking people and putting all your data everywhere in the world. Not that it matters to most of us, but sometimes it matters. And just the general sense of, I want to be in control of my own information, right? Like being in control of your own body is probably pretty important. All right, so Palantir. If we take a look at the stock screener, we'd see Palantir is not exactly oversold yet, which is weird because it hasn't really gone up much. So if we take a look at the chart for Palantir, right, that certainly looks like it's oversold, doesn't it? Trying to take everything out to 2024. I want people to think about longer time frames. It's not super oversold anymore because it's been consolidating for so long, right? About 6 months. This is a really good consolidation pattern. It's in the buy zone. You should have a starter position at least and be selling puts. So $7, $8 puts right in there. I will put one of those into the article that'll be out this afternoon. This is a company that we've talked about a number of times. It's going to be pretty easy for them to dial down their capital expenses and their stock-based compensation program to reflect much higher earnings, same way that Amazon has done in the past. Don't like to compare everything to Amazon, but Amazon is a great example. If you can emulate them and increase your margins while dropping more cash to the bottom line, they can be distributable to shareholders one way or another. Share buybacks is probably what's coming at Palantir. And by the way, Palantir still owns stakes in a bunch of other companies that are valued at basically zero. but some of them won't be worth zero in the future. Black Sky, for example. So this is a company that you should own, and you should be aware that the millennials and the Gen Zers love this company. No idea why. Doesn't make sense to me that a company that cut its teeth on spine is loved by younger people. But whatever, they see it as a technology platform. Maybe they're going to use it in video games to spy on their opponents. I don't know. But you should be accumulating this because it's going to go back into the 30s at some point. And from there, we'll have to figure out if it's going to break out or bounce off of resistance. When we take a look at the screener, which I really hope you all have by now, and we rate it by weekly or monthly, do either one. Got it on monthly right now. Monthly charting shows you the oversold. On the monthly, when something is oversold and priced for Armageddon, and you think that it's going to be around in 3, 4, 5 years, you need to buy it in most cases. It's very rare if you think it's going to survive that on the monthly oversold, you shouldn't be buying. So you go through this list, Spire Global, it's going to be around in 5 years. Satellites are already in the air, right? Black Sky, Algonquin Power and Utilities. Now, they could blow themselves up financially. They could. Probably won't, but that's a risk there, and you have to decide if you're willing to take that. Coinbase. Earlier, I talked about opportunities that pop up when something else goes wrong. The FTX implosion last week, I think, is an opportunity to buy Coinbase. It is probably the only crypto stock that I would buy right now, and only because it's dirt cheap. And what's the other reason that we've talked about? Who is involved with this company that's going to probably keep them on the straight and narrow and in line with what government wants, which is going to be more regulation, right? There's going to be more regulation. So the Coinbase CEO, who's kind of had it out with the SEC, has realized what the future is. Man, I don't like it, but he knows what it is. It is that the crypto world and the blockchain world are going to fall under regulation. Blockchain businesses, just like any other business, will have regulation. But on the security side and the currency side, it's going to be, SEC probably, and, commodities, FDIC. There's a whole bunch of alphabet letters out there that they're going to fall under. Depends on if it's a token or a currency or a stock in the company, right? Coinbase is a stock, so it's for sure under the SEC. And the products that it sells, other jurisdictions too. So it's going to be heavily regulated. Who works in that world? It's BlackRock. And BlackRock, as many of you correctly typed in, is the company that is partnering with them on some things now. BlackRock's the 800-pound gorilla in the investing world. iShares makes them a big deal, and everything else that they do. So if you want to have an investment in the crypto space, Coinbase, which was a little bit bigger than FTX, is going to benefit from the FTX explosion because they're going to still be in it. Big competitor is gone, and they're already on the right side of, or at least moving to the right side of the regulatory framework because of their partnership with BlackRock to offer cryptocurrencies to institutional clients, which is now estimated to be between no less than 5% and up to 10 or 11 or 12% of Bitcoin ownership is institutional. And ask yourself a question: with FTX imploding, losing around $10 billion, it sounds like the number keeps going up, why didn't Bitcoin just completely fall off of a cliff? Why? It's because there's people that know better that are buyers. Costello's partner at the poker table told me that he first bought Bitcoin in 2014, and he told me why he did it. He said it was going to be the one that survived. There'd be a lot of imitators, but it was going to be the biggest. And he listed all the reasons that I've lined up for you why. Store of value for the wealthy. It acts a little bit like a golden passport. It frees the emerging markets from complete dependence on the dollar. Our enemies can get a little bit away from the dollar as well. And ultimately, does the United States really want to be the reserve currency at the level at which we are in the future? Wouldn't it be better for world peace if currencies were a little bit more diversified? Wouldn't it be a little bit better for American price competitiveness if the dollar wasn't so strong? I've showed you that range on the dollar, the Goldilocks zone. We need to get back into that without falling too far, right? You still want to be able to take your international trips on the cheap, right? Right? Come on. But the dollar can be so strong that there needs to be other currencies, and Bitcoin's in its limited way is going to be one of them. And the United States will always be a reserve currency. The dollar will always be a reserve currency just because of the strength of our economy. Somebody at the table asked me, what is Bitcoin valued on? Why is it worth anything? And I gave him an answer that I haven't really said here too loudly, but I've mentioned it, is what is the value of a fiat currency from? What is the value of a dollar from? It's the productive capacity of the economy backing it. It's not just the national balance sheet, because the national balance sheet is backed by the economy. And can we blow up the national balance sheet? Could we spend so much money and go in so much debt that our economy couldn't carry it? Absolutely, it can happen. Are we anywhere close to that at this point? Not really. Based on the value of all the assets in the United States and the annual GDP, we're not even close to what we could spend if we wanted to, if we needed to. Think about the value of a house. If you had a $3 million house with a $300,000 mortgage, would you feel threatened? We know that the value of the assets in the United States are at least 10 times more than our current debt, probably way more. But for argument's sake, let's say 10 times. Let's think about it from the terms of income. If you had $100,000 of debt and we're making $100,000 a year, could you pay off that debt? Sure, you could. You couldn't spend all of the money that you were making, but you could do it. That's almost exactly the point that the United States is at right now. It's about a 1-to-1 ratio. Now, if we doubled our debt without doubling our GDP, that'd be a problem. So we're bumping up to the income limitations for not having to liquidate any assets. And there's a lot of people who would like us to take on more debt, so the United States had to liquidate assets, sell roads to private companies. Ever heard of that one? Sell necessities to private companies. That is the pressure that gets put on by all these smart people who are basically trying to rob you of public assets. That's too high. You have to spin off, your park system or your road system or your sewer system or your water system. They're coming for your water systems. Don't doubt that. They're coming for your water systems. So you better be careful about who you vote for in the future. Because if they talk about privatizing necessities, go get your Pig Latin calculator out. I got a special word that I've decided not to say anymore. I'll still say shit and bullshit. I'm not going to say this other one anymore. Uckfade. Go get your Pig Latin calculator. They start buying the public water systems, we are uckfade. Let's go back to the stock screener. Take a look at the month, sky, planet. And where is Satellogic? Unless they don't have a chart on the month. Oh, there it is, Satellogic. So all the satellite as a service companies are way oversold or approaching. Satellogic has held up the best, so this makes sense that it's the least oversold. Should be buying all those. So anything that you want to own that you think will be profitable in the next 3, 4, 5 years here on Therapeutics. COVID slowed them down, but they've got a good solution. So if you're in a bull market, which we're not, but if you were in a bull market, go back to the weekly because you want to buy the dips then. And the weekly represents the dips in a bull market is really what it represents. The monthly, you're looking for, what is just crushed. And then you take a look at their fundamental value because the technicals indicate that something's up or down. At this point, we just go through the companies. Who is going to be here in 3, 4, 5 years? Alibaba. I've told you that if I was going to buy an individual Chinese stock, it would be Alibaba. I'm not. I'm going to buy a fund so I get more diversification. I don't want the single stock risk in China because sometimes they just decide to get rid of a company. I don't want to have a whole great big bet in one of those companies in case Jack Ma irritates Chi. Those where ETFs play a great role. Diversify you away from single stock risk, but still keep you in the right industries and sectors and parts of the world. You see a lot of our stocks are on here right now. I told you a while back Spotify was going to have a problem, and they have. Intel started to come off its bottom recently, which is why this isn't as low as it was a couple weeks ago. So you should have a position in Intel and be selling puts anytime it drops to get your preferred asset allocation. Jumia, one of the things I didn't mention last week, and maybe I did, is that they actually use the Amazon platform already integrated with Amazon. If you take a look at Jumia's website, it looks just like Amazon. Amazon wants to expand in Africa. Jumia's in the most countries. Do the math. So I will be honest with you. I'm not going to play a lot more poker over the winter just because I'm a little bit tired. I'm going to play with my friends. But these tournaments that I go to, and I will play a little bit in New Orleans. I will play a little bit in Florida. A couple more tournaments in Chicago in the spring. And then World Series of Poker in Vegas where I meet all sorts of people. One of the reasons I play in the big public poker tournaments is because I'm respected enough as a poker player, usually, that people will talk to me at the tables. And then you start, who are you? Just happen to be sitting down next to healthcare executive at this poker table. We exchange numbers. We'll keep in touch. He's in Chicago, so I'll probably go have a meal with him. I've met a lot of good people playing baseball, which I can't do anymore, and playing poker, which I can. And that is one of the reasons why people join country clubs, right? To meet people. It's one of the reasons I'm working with a couple of firms in downtown Milwaukee, and I'm going to open up an office down there. Probably only go twice a week. The information you get from talking to people is important. And I'd just like to point out one more time that a lot of the people who write about investments are literally at home all the time. I know there's certain guys who go to Disneyland a lot or whatever, but if you're not talking to other investment people and business people and government on an almost continual basis, your information is going to be limited. Hedge fund that I'm going to be down the hall from, I'm curious to know what they're all about. I haven't met them yet. The information is all out there for us, and it's public. Understanding that information is harder, but the more you talk about it, the more you understand. There's some very basic lessons that I need people to understand. I'm trying to tell somebody that now who's going to become a client. You need to respect the process. Understand that the secular trends are the secular trends that are not going to change overnight. So the upward secular trends is what you bet on, and the downward secular trends is what you get away from. Don't have to bet against them because that's hard, but you don't want to have a lot of money in the downward secular trends. And if you do right now, you have to be looking for exit opportunities. Fossil fuels. Doesn't mean you have to sell them right now. I'm going to hold on to Occidental until Berkshire buys them. They'll provide me my exit. I don't have much in Occidental. I just sold puts a few times. I have very few shares, which I should have had more. I wish I had more. But Permian Resources, I think I'm going to get 2 or 3 years out of that because they were so good about buying their assets out of other people's bankruptcies. When you see a bankruptcy, look for what surrounds it. What's going to be the beneficiary? Who's going to be the beneficiary? Because it's always going to be out there, right? If a competitor disappears, that means the businesses that are remaining are going to do better. That happened in fertilizer stocks, right? When potash and agrium merged, and there were problems with Uralkali and other European producers, and BP decided not to add potash mines, whatever that was, 6, 7, 8 years ago, we bought Nutrien. I actually bought potash before the merger and then bought Nutrien, $20-something a share. It went to over 100. We almost top ticked it when we sold it. I mean, when we sell it 110, 115, 120, what did you all sell it for? Over 100, right? I'm finishing with this thought because crypto assets are destroyed right now. So you need to own DApp. And if you're adventurous, you can buy Coinbase. Probably be buying a little bit of Bitcoin. Again, I've never told you to buy a lot of Bitcoin. I said take a single-digit percentage of your bank savings, right? That excess bank savings that you probably wouldn't spend unless like the world was ending. In which case, Bitcoin might be great. If you think you might want to be a validator for digital contracts, work your way up to 32 Ethereums, right? Somebody asks about copper and Freeport-McMoRan. It's hard to ever get a price on that, right? I mean, it just isn't showing up. So let's take a look at Freeport-McMoRan. Just touched the top of our buy zone. Never really got recession pricing. I've bought Freeport-McMoRan 3 times in my career. I've never bought them without recession pricing, and it happens. I'm not buying it right now. You can trade it, you can chase it, you can try. On a super spike, it might go way up there. Just like semiconductors came way down. I think that this is a hopium rally. I think if you're a trader, you're probably doing really well. But I think if you're a trader, you also know that it probably, at least, you probably make a trend line there. Probably at least get down to 30-ish. I think it very easily could break through, get down towards 20-ish. So again, you have to decide who you are as an investor. Are you a trader? If you're a trader, you weren't even asking about FCX. You already knew the story. If you're an investor, focus more on getting super cheap prices because it happens. You don't have to invest in something that's in the middle of the market. I haven't used that phrase a lot, right? Lately. Used to use it all the time. Ignore the middle of the market. It's too hard. There's no margin of safety. It's like being a bowler and only being able to throw a ball over one board. The reason why the best bowlers are the best bowlers is because they throw a ball that allows them to hit 3 or 4 or 5 boards and still get a strike. Right now, Freeport-McMoRan's a really hard trade. But if it was 20-something, it'd be a lot easier. Look for the easier trades, right? Look for very short hurdles that you can step over, not the higher ones that you have to take a running start and jump over. That's some variation of a Buffett thing. Somebody asks about how much DApp, how much Grayscale Bitcoin Trust. Well, again, it depends on you. 12% in any one industry that's not a broad industry, right? Crypto and blockchain's fairly narrow. It's going to be big. I think combined 12% is pretty big. 6 or 8% is probably more standard. It can hurt you less. So you have to decide who you are. Are you aggressive? Are you trying to hit the home run? Are you just trying to find several ways to marginally beat the S&P 500? Because it's easy to beat the S&P 500 by 2, 3, 4 points. We should have proven that by now. If you're good beating the S&P 500 by 2, 3, 4 points on average, good years and bad years, we really just need to use the ETFs and own, a good slug of QQQ and some PBW and QClean maybe and EMQQ, right? 7 or 8 ETFs, you're done. You're going to beat the S&P 500. Still going to be volatile, still equities. We're going to beat the S&P 500 over time. If you're trying to average 15 to 25%, which is what I try to do, you got to add some stocks, 12 at a minimum, 30 at a maximum. And you have to employ a thinking process. Okay, if I'm in a bear market, I'm looking for as cheap as possible. If I'm in a bull market, I'm trying to buy the dips. I don't think we know what we're in right now. I think it's much more likely we're still in a bear market than in a new bull market. But I've also told you that I think that the new bull market could be right around the corner if, the world suddenly starts to get better. China-United States relationship gets better. Russia backs out of Ukraine a little bit for whatever reason. Federal Reserve says, hey, I think we've hit the neutral rate. I think we can just keep rates the same for a while. The bad news that could have been coming, that I told you about a year ago was coming, already came. We are closer to positive surprises than negative surprises at this point. And there's only a couple of negative surprises out there that I think are super likely to happen, but that we'll get over them. I do think something bad is going to happen in the Middle East. And that's probably the biggest risk, is the energy spike for some reason. But even that would be short-lived. And that would really catalyze all the renewable projects, right? Anything bad that happens with energy prices from this point forward just stimulates renewable energy investment and stock performance. So given the things that we invest in versus the things that we try to ignore, we should be net buyers from here on out, until the next stock market spike. Oh, I did want to show one more thing. DNA, accumulate that, Intel, Warner Brothers, and Paramount. I wanted to show you the charts. Which one is it? Which one am I showing you now? Hard to tell, isn't it? Chop, 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 chop. Spike because of that hedge fund thing. Crash because of that hedge fund thing. And now people just hate. Chop, 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 chop. Spike because of that hedge fund thing. Crash because of that hedge fund thing. Now people just hate. When something gets this oversold, just ask yourself the question, are they going to be in business in 5 years? I think Warner and Paramount, I think there's no doubt about that. Question is, how much money can they make? And the answer is a lot. Warner Brothers has cut their debt over $3 billion in a year. They could be essentially net debt free in like 3 or 4 years. And then just start dropping all that money down to the bottom line. Shareholders, dividends, buybacks. So what they're saying is going to happen. I believe them. Paramount, same story. And they're probably going to get acquired. A lot of smart people buying Warner Brothers, Discovery, and Paramount. Why? Because the cash flows support higher prices, but the price is still down here because, I hate it. It went down. I hate it. Right? It's like Gollum. I hates it. Good. I'm glad you hate it. I'll buy it from you. $18 a share. Thanks. And as this consolidation in the industry continues, and it will, somebody made a very compelling argument to me why Apple would buy Paramount. He said, by the way, that Buffett guy owns a lot of both companies. I was like, all right. Maybe it won't be Netflix. Maybe it won't be Comcast. Maybe it won't be Amazon. Maybe it won't be Google. Maybe it will be Apple. Who knows? All I know is that this is a company that probably gets bought. And if I'm Sherry Redstone and I really just want the money, which is what her deal seems to be, and Apple comes along and says, hey, we'll buy Paramount for a combination of cash and Apple shares. How do you feel about that? She's going to say, I like that idea, but I really think it's a $40 stock. And Apple's like, well, we thought it was an $80 stock. Well, okay, we'll give you the 40. In any case, if you don't own Warner Brothers, Discovery, and Paramount, I really don't understand why you manage your own money. And I say that in all sincerity. If you're a dividend investor, for sure you should own Paramount. These are, this is pandemic pricing. You should be buying this. We drew a trend line. Oops, wrong trend line. There you go. One there. Well, that might have been the bottom. Maybe not. Maybe go down a little lower. but you got to like that slope, right? This would be a classic spot to start rebounding. Same thing with this one. Oh, not same thing. This one's just bottom, and Warner's just destroyed. This is a bad chart though because of the merger. But they just paid off $3 billion in debt. People still hate them. It'd be different if they're still accumulating debt, right? If they're still accumulating debt, that'd be bad. Paid off $3 billion in debt, $3.5 billion, I think, way faster than anybody expected. So, and I think just from a quality standpoint, if you really take a look at what Warner Brothers Discovery is, I think, along with Netflix, they're must-have streamer. Remember, they got CNN. They can put news and sports on their platform too. TNT, TBS. They have sports, they have news, they have movies, they have shows, they have reality TV, which is super cheap to produce. And they have the biggest global distribution of all the streamers. Black Adam likes Warner Brothers Discovery. No. Right? Blue Horseshoe likes Anacott Steel. Black Adam loves Warner Brothers Discovery. And so does the Justice League and Game of Thrones. Man, just go through all the shows that have been on that network and are in that library. Oh. All right. Have a good day. I'm going to get this edited this afternoon. In the future, at the request of a few people, if I don't get the editing done same day, I will put the unedited link up and in the chat just so you have it that night. So no matter what, you'll get it that night. I'm going to try to get them edited each afternoon after I do this and get them up by time you're home from work. All right. Take care.